So we are live now.
Okay. Is this recorded? Can you record this?
Yes, now it will be recorded. There was a problem previously. I figured that out. Now it will be recorded.
Okay.
So, Roman, can you share with me your WhatsApp? I will share with you link. You can join online. Just give me a moment.
Hello, Rami.
Rami, can you hear?
Yeah, I'm hearing from your. I've muted mine. كيفك هشام? All good?
Good. How are you?
All good.
احنا حكينا من قبل.
Uh, your face is so familiar, but I'm not sure.
Where are you from, Rami?
Lebanon.
Okay. I thought maybe you're from Jordan and I saw you here somewhere. Okay. Ahlan. Hala Jalal. Roman. How are you?
Hello.
Hala Jalal.
Ami. Ami. I'm with my friend, please.
Me وعنا عبد الله. Shayib. Hala Abdullah.
Hisham, how are you?
Good, good. How are you?
All good. Nice meeting you.
Nice to meet
Hello, Ali. Welcome, welcome. Please join online for the legal session. So there you go, Hisham. Hi, everyone. I'm excited about this session today. The focus of today's session is understanding the legal aspects which really impact the startup from pre-seed to all the later stages. But the foundation is actually being set at the pre-seed stage for the valuation cap and for this and via safe notes. So we are honored today Hisham, which is who's a VC lawyer and working actively across Middle East and US, would walk us through the safe notes, company registration, all the legal aspects impacting the early stage startups. So I'm pretty excited for it. Welcome, Hisham.
Thank you for having me.
First of all, I would like all of you to introduce yourself shortly, and then we will begin further on this.
Hi, everyone. I'm Hisham Qasim, the founder of Qasim Legal. We're a venture firm. We're a law firm that works in venture. And we've been doing the same thing for almost 20 years now. Thank you, Ayub, for organizing these amazing events. It's very nice to meet all of you. Maybe we go through the room. Rami, with you. You look familiar, Rami. I think you're on mute, Rami. Or are you guys all in the same room? You're all in the same room, right?
Yeah, hi, good evening, everyone. Can you mute yours?
I think all of you have to mute yourself. Anyone okay.
And the volume of the PCs.
Mute yourself. You can speak now.
All right. Good evening, everyone. Can you hear me? My name is Rami. I'm the co-founder of nextauto.ae. Nextauto is a digital platform that caters for the car automotive ecosystem in the UAE. I've been here for the past 2 decades in the UAE, working in the automotive industry.
Perfect. Abdullah. You can see here, Abdullah, when you're speaking, because the
Hi, good evening, everyone. I'm Abdullah. I'm also the co-founder for NextAuto.ae. I'm also here, born and raised in UAE. So basically, we started with Rami Next Auto since the last one. My previous job was also in the automotive industry. I served for Alftime Group and for Kavak.com and for BMW in the last 1 decade. And we are now also excited for January to launch Next Auto officially as the best car service platform in the UAE and in the region as well.
perfect. Shiv. Right.
Hi, my name is Shiv. I'm the co-founder of a company called Renewable Algorithms. All my life, last 10 years, I've been in the solar industry. And we are an AI solar asset management platform that optimizes solar assets using artificial intelligence algorithms and end-to-end work order. We are an ERP for solar asset management.
Perfect. Ali, you have you joined?
I didn't because the mic's on, that's why. So,
You can join. I will. So I can.
Join and mute.
that's what I'm going to do.
Perfect.
Hi, Hisham. How are you? Hisham, my name is Ali. I'm founder of Swoop Car Technologies. We are building a product called Swoop for auto parts, basically trying to digitize the supply chain for auto parts. We started with the used ones, and moving on, we'll elaborate into aftermarket and OEM as well. We're a revenue generating organization with currently close to 36 customers, active customers, which have generated, without any tech for now, at least 400K of GMV.
Perfect. Roman, without unmuting, you can just speak yourself.
Because I couldn't turn out the volume actually. Hisham, can you see me?
No, I can't see you or hear you.
Have you joined? Oh, sorry. You're here. Mute yourself and now speak.
Okay, great. Hi Hisham, my name is Roman, and we're building Neo. This is a new generation social media platform and additional reality multiverse. This is the platform that motivates people instead of sticking to their phones and just sliding to go out and buy tasks, events, and challenges connected to the map, motivate them to activate physical, business, and social activity. It's also the earning platform. People can earn there by creating content like virtual excursions with artificial intelligence guides and companions and selling them online, or by doing the tasks which can be paid, or making also the challenges with their friends or anyone online.
Roman, you consume your all time. We're moving next. Please.
Hello, Hisham. I'm Jalal. I'm from Iran, and I'm founder of Lamino. Lamino is a platform that help people play their favorite song with our practical content and interactive tools. And the most focus of our audiences are Persian languages currently.
Okay. Okay. Well, it's nice meeting all of you. I'm sure I'll ask you a lot more questions. Okay. Maybe I'll do a poll. Do you mind, Ayub?
Yeah, sure. I think like we will keep the pattern same. Initially, you will give a short kind of like pitch, and then we will straight jump into questions,
Okay.
and that however you feel good.
Okay. So let me see. We'll do a very short. There's only 6 of you. So one of you is revenue, post revenue. That's Ali, right?
Yeah.
And how many of you are? This is your first company, your first startup. You can raise your hand. Okay. So 1, 2, 2. So a third. And who's already raised money? Safe, investor, angel, venture. No one's raised money. Okay.
One guy is.
Okay. Okay. One guy. Anyone invested in a startup before, whether as an angel? You have, Abdullah has. Okay. Okay. So not. And then the last question I should ask is, do you guys know what a safe is? Have you heard the term? Let's start there. Yes, we've heard the term. Okay. So we'll start with safe, because this is that's number 4 in my thing. Okay. So, does anyone know what a safe is? Maybe they can give the answer. Anyone? Jalal, you've invested before, Abdullah, so you should know what a safe is. Do you know what a safe is?
Agreement for like safe agreement between you and the investor for fundraising. I remember this
Yes.
conversation.
Yeah. Do they buy shares in your company when if I'm the investor and I give you money and we sign a safe, do I get shares in your company now?
No.
No, correct. That's true. So it's a kind of debt, actually. It's a type of loan where I invest now, but I don't get shares until the future. And the future is usually when you raise a priced round, which is a big round. Usually it's a Series A. Now, why do people use SAFE? Why don't I just say, you know what, give me 10% of your company now? Does anyone know the answer to that? Why do we use this? Why do we not just buy shares?
Because the valuation could be ambiguous for a pre-seed startup without revenue. So you could do safe first and then go for a valuation round later on.
You got it. That's exactly the reason. At your stage, it's very hard to say what you are valued at. You don't have a lot of traction. Ali, how long have you been revenue generating? A year, 2 years?
Since 6, 7 months.
Okay, so even less than a year. So none of you have a very long track record. I can look back. I can say discounted cash flow. There's an idea. There's a lot of potential. So it's actually very hard to put a valuation. So the question becomes, what is the valuation, right? How much should I raise? I'm assuming you're all raising money, right? Or you all want to raise money. Maybe we use someone from the audience. I'll do this as a worksheet. Okay, who knows if they want to raise money in Q1 next year?
Rami.
Rami. And how much do you want to raise, Rami?
Around $350,000.
Okay, so Rami's actually a great example. You've worked in the auto field for how long?
18 years.
18 years. So this is so he has industry experience. I'm not going to ask you your age, but you can tell me, are you above 35?
Yeah, I'm 41.
Okay, so
This is the ideal one, yeah?
yeah. So we have industry experience, life experience, we'll call it. We won't say old. And you've worked at Have you started a business before?
No,
No. Okay, but you've worked in a corporate job, for example.
corporate job, yes. And I exited as the general manager of the company.
Okay, so you have leadership skills. Okay, so basically, I'm doing what any VC would do. I like the idea. I like Rami, but I don't know what the value is because I don't have any metrics, any financials. It ultimately boils down to 10 to 20% of the company, of whatever you're raising. It's 10% if you are like Rami. Rami, you're probably in the middle. You're probably 12, 13. It's 10% if this is your second, third startup, right? Then you can, so 10%, if the valuation's 10%, you're raising 350. So what does that make your valuation? 3.5 million, right? And if it's 20%, this is your valuation, right? It's 1.75. This is a rule of thumb. I'm not telling you to do this, but as you think about it, your valuation, if you're raising 350 lasts you how long, Rami?
Minimum a year. And if
Okay.
things goes as planned, then we're positive. That
Yeah.
would stand.
How much do you need for 2 years? So what would this number be?
For 2 years, it depends on what phase two of Next Auto would be.
Right. I mean, let's do the middle scenario, not the amazing or the worst case. Would this be closer to 800?
Yeah, all right.
Yeah, with 800, your valuation is 8, right? And at 20%, your valuation is 4. But do we have any younger guys? Do we have guys that just graduated college or maybe not? Okay.
No, we have mature people.
Mature people. So since they're all mature people, you are looking at 10 to 15%. The 20% is really for young college graduates, no life experience, industry, kind of fresh, so this is how we set valuation. This is the rule of thumb. Now, Rami, when you talk to investors, this instead of 8, it could be 7.5, it could be 9, but you're looking for this range. You're looking for around 8. Does that make sense? This part.
Question.
Yes.
How did you start with 10? So what is the logic behind it? Is it because of the age, experience?
Yeah. You have all of these. You are what we call a grown-up, right?
Champ.
Yeah.
He's a champion, like you're saying. All of these are.
Yeah. You have, I mean, except for the second, third.
Yeah.
So you're probably at 12, right? Or 13, right? Not having this. But if you have all of them, you're at 10 or 8 or 9, right? %. So because why do we do this? Why do we do this and not look at your business? Because we don't have a business yet, right? The real investment is in you, right? You have a great idea. I need to make an investment in you. I need to trust that you can execute. You're going to hit 100, when you're 20, 20 years of experience, you've encountered setbacks and failure in your life and you've overcome it, right? So all of this is built in.
Rami has some revenue as well.
Okay, that's good too. So yeah, maybe if you have revenue, but you don't have a second or third startup, so we're back to 10, right? But that's really what they're looking for. Is they're looking at you as whether or not.
Without unmuting, you can ask questions.
Yeah, please.
Can I ask a question, please?
Yeah, please.
You will have a few co-founders. Does this points summing or how it works? If somebody has a industry experience and other leadership skills.
Yeah. I mean, it all helps, and this is also why people don't like solo founders, right? Because this applies to the team as a whole. So you've got a tech guy, maybe, but the CEO is very seasoned and experienced, and the CTO has done three exits. So I look at that as one package.
Okay, thanks.
Yeah. Okay. So we're gonna do a. How does it actually work? I know Ayub, you had. By the way, who has three co-founders? Does anyone have three co-founders?
Yes, Shiv.
Shiv, are you guys equal?
Sorry?
Do you all own it equally, or?
It's 50, 30, and 20. First.
50. Who owns? You own 50?
Me
20?
30 and Srinath.
Okay.
Okay, so 50, 30, 20. Okay. And you are raising, how much are you raising?
$250,000.
Guys, more, come on, more than this. How long does it take you? A year?
12 months.
Okay. But ideally you want 2 years. So for 2 years, would it be 500?
For 2 years, we are having a cash flow deficit of $550,000. Yes.
So 550. So ask for more. A venture fund doesn't want to do all the work for 250. They want, try to ask for more.
Pre-seed, no revenue. So would that still be okay if you were to ask more in the pre-seed round?
Yeah, I mean, 500,000, especially in the UAE, is not. I mean, they're giving 100, 200 Jordan for brand new companies. So, yeah, and UAE, everything is double and triple, and your valuation would probably be around 5. That would be. I'm guessing you guys are all experienced and you've done this before, and.
Yeah.
No? Yeah. Okay.
We have worked in a startup before, but we haven't started a startup. This is our first time as entrepreneurs.
All right. Let's say you're at 4 million, which makes it 13.75. Okay. And there's a discount of 20%. Said we don't know how many shares we're going to give the investor, right? So you sign the safe today with Ayub, because Ayub is secretly rich, but he's not telling you. Right, for 550 in December, and then in December 2027, which is in 2 years, you have a priced round. You have a Series A round, right? And the priced round investor wants to invest $1 million, and they value your company at 10 million, let's say, right? So, what is the price per share for the Series A investor? I'll call this a Series A investor. Does anyone know how we got the 10?
Yeah, with a million valuation, 10 million valuation.
And 100,000 shares, so that comes.
Yeah, it's 10 million valuation divided by 1 million shares issued, the ones to the founder. I haven't included ESOP or any of that, but ESOP would be included in the 1 million. So we have 10,000 shares. So the Series A investor is going to get 100,000 shares, which is the amount they're going to invest, million divided by $10. Now that I have this green number, I can figure out how much Ayub is going to get. So if I do the valuation cap price, so a safe has 2 prices. Most safes have 2 prices. They have valuation cap price and a discount price. Valuation cap, the $4, you guys know this, right? It's 4 million divided by 1, right? Is that clear? Yes, no, yes.
Yes.
Okay. How did I get the discount price? Does anyone know how I got this?
From the current price.
It's what? Sorry?
Say it loud.
It's a 20% discount from the current price at the new valuation, right?
Yeah. So it's $10 times 0.8. So guess which price the investor gets? Guess what price price, right? And why does he get the lower price?
Because he invested initially.
No, the cap.
Got it. Yeah, I mean, but why do we give him that discount? It's because he invested initially. So that's the number of shares. That is the 550 invested by Ayub divided by 4. It's 137. This is what your final cap table looks like, right? Ayub got 11%, and the Series A got 8. Now, why do we have a discount? Watch this. If, let's say, things don't go as planned and it's all terrible, and the Series A investor said, you're only worth 3, you're not worth 10. Ayub now gets 2.4, not 4. So the discount is downside protection. And your final valuation cap looks like this. I mean, your cap table looks like this. This is how safes are calculated. If you don't have a discount, it's easy, right? We don't need 2 prices. We just use $4 a share. That's the valuation. If we have a discount, that's also easy. You just use whatever the Series A price is and you multiply it by 0.8. Most VCs want both. They want the protection. Does this make sense?
Yeah. What happens, Hisham, if there is no valuation cap? What would happen?
So let me remove let me say the lower price is always the valuation cap. Okay. If the if the investor invested 10 million at a 10 million valuation, the price is 4. I'll make this in green too. Or if they invested 2 million, the price is still 4. So your price round isn't going to affect the number of shares that Ayub is getting. But if I do it the other way, there's only a discount, then whatever value your Series A investor gets, that's the number of shares the Ayub is going to get, but with a 20% discount. I mean, very strong startups are able to do like just one, right? If we do see just one, we just see the valuation cap. We don't see a discount, but I think 80% of saves have both.
Is there a formula to calculate the value cap while having this?
Yes, very good question. How do we calculate the valuation cap? Most of the time, the safe notes are not taking into account the actual valuation.
Yeah.
Only they are making a cap 99% of the time, except few areas. So how do we determine the valuation cap?
So given you guys are going to be what you raise divided by 10%, which is why I wanted a bigger number, right? This should be your runway for 18 to 24 months. Maybe we use another example. Does anyone know how much they need over the next 18 to 24 months? Other than Rami and...
Most of the guys. So Rami,
Rami,
we know what we need now.
For the next, you already have a forecast, right?
We have a forecast, but with no fund asking.
See, we have a revenue, so...
No, but Hisham, your question was like, how much are you raising in the next 18, 24 months?
Yeah, how much money do you need to survive for the next 18 to 24 months?
So...
How much?
Our initial ask would make us survive for
350K.
Yeah.
350.
Because if we go as per the target, so we don't need to raise fund.
350K dollars.
Until we need to scale up or to expand, and it's not something.
You guys are asking on the lower end. We see people usually asking for 500 to $1 million.
All right.
Yeah, but since you're at the lower end, is anyone asking for more than 500,000?
Shiv, how much is your ask?
550 for the 18 months. So
550 for the 18 months.
That was our example.
Are you the highest? Are you 550?
Yes.
Okay,
Uh,
so
you, Ali?
2 years,
so for you guys, you are all going to be between 4 and 5 million. That is going to be your valuation. This we call this business plan valuation or a semi business plan valuation, but you're actually selling less than 10% of your company at these valuations. But that's sort of the general rule of thumb, is how much you're raising by 10%.
Hisham, what is the benefit of the valuation cap to a founder or investor?
To an investor, they get to convert. So let's say it does really well, right? You, in 2 years, you're raising your Series A at 15 million. That means I don't want to convert at 15 million. I want to convert at 4. So this way I've almost tripled my money, right? So the valuation cap helps the investor. If the company does really well, they make immediate gains right when you do your Series A, and they justify it in the beginning when you didn't have anything, right?
So does it sort of like provide them security for the dilution part? Like they
Yeah.
are capped,
Yeah.
like
So
it will not be diluted further.
yeah. So they know they're going to own at least 13.75% before the Series A. So if I take out the Series A, because here they're not at 13. If I take this guy out, why are they at 12? Oh, because I did the discount. I need to do the minimum. Sorry, just a minute. I played with this. Yeah.
So often we have seen, Hisham, in the safes, it's written like discount and as well as the valuation cap.
Yeah.
So what does that mean? Like, are we taking into account discount or are we taking into account valuation cap
And who
as an
decides those
investor?
numbers? Sorry.
Yeah. So it's both. So we actually need to figure out both numbers, the valuation price and the discount price. The valuation is 4 million divided by 1, you get 4. The discount is $15, which is what the Series A investor is paying, multiplied by 0.8, that gives you 12. So this should be 13, but it's not working. I don't know why it's not working. Yeah. Okay. So this is the safe. We have time. I usually cover 3-4 topics. I don't know if there's anything else. Oh, one more thing about safes. Investors are going to ask for rights in addition to the safe, right? So venture funds are going to ask for information rights. They want monthly or quarterly or annual financial statements. They want something called pro rata. Do you guys know what pro rata is?
Backwards.
It's in your Series A round, right? When you have your Series A round, I want the right to, like, let's say you're raising a Series A round of 1 million and I invested 550. I have the right to invest another 550 in your Series A round. It's 1x what I invested. Right? Does that make sense? Since I have the right to invest again. They don't have to, but they want this right. And there are no terms, right? It's whatever terms is the Series A, they have the right to put up to 1x their investment.
But Hisham, why would this question come up? Like they should have a freedom to reinvest. Usually, is there a problem?
No, I mean, so they usually put it in to make sure that they double down on their winners, right? If you're doing really well, they're going to want to put money in again, and they don't want you to tell them no.
So they get the first right of refusal.
Yes.
It's slightly different. They just have the right to put the amount they invested in the safe. So he put in 100,000 and you're raising a round of 1 million at Series A, the first 100 goes to them if they want it.
Yeah.
Okay, and then
And the discount of 20%, is this like the norm or?
yeah, 20 is the norm. I've seen 15, I've seen 10 and 15, but 99% it's 20%. This is very rare. This 5% of the time I see 10 or 15. MFN, do you guys know what MFN is?
Most favored
Nation. Yeah. So MFN says you can't sign with Ayub today for 4 million and then come sign with me next week for 3 million. You can't go down. If you sign with me after Ayub for 3 million, Ayub's valuation cap goes down to 3 million, right? But if you sign with me for 5 million, Ayub's valuation cap stays at 4. So if it keeps going up, it's fine. But it's to protect investors from you selling safes in the future at a lower valuation cap. Does that make sense, or should I say it again?
Did you get, guys?
Yeah, we're done.
Okay. In the Gulf, a lot of angels will ask you for a board seat. We did a bunch of research in the US. Board seats are given on average when the investment is at least $500,000. That's when investors can start to ask for a board seat. And usually we don't like to give board seats unless they're a super angel and they're well connected and they're, but some guy that just wants a board seat just to tell his friends he has a board seat, we don't, try not to do that. Another question I wanted to ask, anyone of you been approached by someone that says, give me 10% of your company and I will open doors for you, I will introduce you? No one?
Me.
Who said me?
Yeah. I'm in Dubai exactly for my the tomorrow meeting that I will going to sign a contract with a co-founder for this reason exactly.
Okay.
Something like this.
Well, that's good. I'm going to talk you out of it. Okay, good. So this is very common in the Gulf. Open doors. And how much does he want? 10, 15% of the company?
No.
How much does he
Both 13%.
13%. Wow.
But I didn't introduce myself in the beginning of the session. I'm working on a startup on AI that bring AI to social, and the person that I'm going to sign contract with me is an influencer influencer that guides other Instagram influencers. He has courses in the Instagram to raise Instagram page, and he have good communications. He asked me 13%. I didn't sign yet, but he asked, and I'm going to communicate with him about that.
So the open door guy, the influencer. Usually we don't argue with them on the percentage. It should really be 10 or 15%, right? But it's very hard to argue over this. But what we do tell them is for every post, for every whatever, I'm going to give you 0.1%, right? You put very clear metric for it.
I put the earning and with the sales target. For example, if you touch the sales target for example, an example,
target, you will get your share, and we invest their share for about 5 years, with 2 years of freezing
Yeah.
the share.
So
First,
you have sales target. If he's gonna give you sales of 100,000, you're gonna give him 2%, for example.
for example,
Yeah.
this will raise both during 5 years.
Yeah. Okay. So long as you have a meter of what they need to do, because from experience, these guys generate zero. They're usually not. They'll do 1 and 2 and 3 introductions and 4 posts, but then they get bored and they move on. So it's very important not to give them the full 30 up front, and to say, I will give you as you perform. And the sales target needs to have a time limit. I think you said 5 years is the time limit. Like they need to raise the 100 million or help you generate the 100,000 within like 8 months. And if they don't do it within 8 months, they don't get the 2%. They get 1.5%, right?
Yes, exactly.
Does that make sense?
Yeah.
Okay. All right. I think that is saves. Your investors may ask you, they may say, I don't want to give you the full 550 now. I want to give you 200,000 now and 250 when you do XYZ. That's fine. That's actually pretty common, especially at your early stage, but it's usually 50-50. The maximum I've seen it is 1/3, 1/3, 1/3. But anyone with like 10 payment plans, and that's too much, right? So it's either 2. The most common is 2. The second most common is 3. It's 3 tranches. All right, let's talk.
So what happens, Hisham, if I'm raising from 3 different investors? Like one is giving me a check of 250K,
Yep.
another one is giving me a check of 100K or so. I'm raising 500. In that case, what will be the situation like? I'm signing with one in the first month and the second one in the second month. But of course, the in between, I'm increasing the revenue and the valuation cap will be different.
So you want to freeze your cap for about 6 months, right? So if you're raising from safe holders at, let's say, 4 million, try to keep it 4 million, because your investors are going to see each other. They're going to see each other's safes. They're not going to like it if I came in at 4 and then the other guy came in at 4.5 a month later. So try to raise at one cap within 6 months, and then do another round in 18 months or in a year, right? Try not to differentiate between them too much.
Right. So only thing is like freezing the valuation cap. It will solve half of the problem.
Yeah. So just keep the cap at 4 and the discount at 20, and you don't have to wait. You just sign, they wire, you keep going until you hit your 550.
Right.
Yeah.
Hisham, one question back to the having your investor as a board member. You said to avoid that.
Yes.
Any specific reason? Like, do they have the right to vote, or?
Yeah, they will have the right to vote, but not the right to block, right? So you own majority. So let's say the board is 3. You'll always have 2, they'll have 1. So you'll always override them. I guess I'm saying add them if they add a lot of value and you want them on the board, right? But
that's what I meant. We can use them as a PR,
Yeah, for PR, you can say you're on my advisory board, which is non-voting. Right? This way you don't have to fill out official paperwork. They don't have an official seat. but you can put them on your website and your LinkedIn and whatever, as he's a member of your advisory board. Advisory board, you can have 500 people. They have, from a legal perspective, you shouldn't do it from a practical perspective, but they have no voting power.
And the voting, like we can see some companies, for example, varies between one board member to one board member. So let's say me and Rami are executors as well and founders. So in case we get someone on the board, do we have the right to tell them we have, let's say, 2 for me, 2 for Rami, and 1 for you as a vote? Like 2 votes.
You already have majority, right? So it's 1-1-1. So you still have majority. I guess you could, but it'd be the same, right? It'd be the end result would be the same. We can talk about. We don't have much time actually, so I'm trying to think about. Let me go to the table of contents.
I think it will be good to discuss founder agreement because there are 2-3 founders most of the time, and it's very important to go through the founder agreement.
All right. So what is a founder agreement? It is who owns what. What do you guys do, right? It's really bad to have founders that do the same thing. Everyone should have a different brain, right? Someone is very good with people, someone's good with numbers, and someone's good with, I don't know, something else, with marketing, right? Does anyone have a team that overlaps, a founder team where there's similarity?
To a certain extent, yeah, but not entirely.
Yeah, but so if there is overlap, you guys should write out what each of you is responsible for, right? Nothing, it doesn't have to be formal. It could be on a napkin, and you say, look, I'm in charge of employees, hiring and firing. You're in charge of the bank, and you deal with the coffee and the paper and the whatever, right? Having some role is good. And then mainly the founder agreement is for what happens. Good, bad lever, death, disability, something, la samahallah, something happens, and then drag and rofer. So we'll go through these very quickly. So we'll do ownership first. Who has full-time and part-time founders, or are you all full-time?
We are full time.
Everyone's full-time. Okay.
Yes.
Not us.
Okay. All right. Who has full-time and part-time?
Raise your hand. So
Yeah.
this will be better.
Okay. And how many are you? How many founders are you?
So we have 3. 2 of us are full time. 1 is part time.
All right. What is the ownership?
It's 40-30-30.
Okay, that's not bad. Usually we do the full-time has double the part-time. So wait, the full-timers have 30-30 or?
No.
Okay.
40 and 30 are full time, and then 30 is part time.
Okay, that's not that bad. It's when we see it really different. But so another way to do it would be 40-40-20, but you're not that far off from the general rule. Why is the full-timer 30, the second one? Did he join late?
Yeah.
Okay. So actually you're in the range. It's good.
How is Shiv?
We have time.
Yeah, but one of you, like, you have 50%.
Yes, the CEO has. It's in the descending order of how much we have invested in the company capital.
So you invested more. Okay.
Yeah. So this is 2 full-timer, 1 part-time. So you're very close, 40-40-20. If we have 3 founders, all part-time, and then 1 becomes full-time, and then 2 become full-time, we have a sheet, right? So we have 3 full-timers, 10,000 each. One of them becomes full-time. We will double his ownership to 20, 10, 10, and then if the second one becomes full-time, then we'll also double their ownership. So it goes to 40. That's usually how we deal with founders becoming full-time and part-time. We add or subtract shares from them. Is that clear, this part? Yeah. Okay. Okay, so what happens if, so lever, type 1 and type 2. Why do we have type 1 and type 2? Okay, so a good lever and bad lever. Good lever is they quit, they get another job, they stop working, none of you, they're no women, right? So if you have to take time off, have a baby or whatever, life happens, that's a good lever. A bad lever is more. It's you commit a financial crime, you breach confidentiality, you go work for the competition. So you have to work very hard to be a bad lever. Now, if you're a good lever, you keep your shares. Do you guys know about vesting?
Little bit.
Yeah.
You can probably explain a little bit.
Yeah. So this is founder 1 has 10,000 shares. So the normal vesting, all of this can be adjusted. They have to work 1 full year. This gray part is called the cliff. And then they get 25% of their shares. They get 2,500 shares. After they finish their 1 year, they then, every month, they get 208 shares until year 4. And then that's when they get their 10,000 shares in full. They only get it after they finish 4 years. Okay, so if you are a good lever at month 25, the first day of month 25, you keep 5,000 and you don't get 5,000, right? It's half. How many shares do you get if you leave in month 5?
None.
Zero.
Zero. You're right. It's zero. You have to finish the year. So
Yeah.
if you,
In this scenario, right? Like, let's say tomorrow we have a team and we need to give vesting.
That's called ESOP.
ESOP, but it's the same formula, by the way. The only difference between founders and ESOP, you actually get your 10,000 shares now. And if you leave in month 25, you keep 5,000 and you give back 5,000. It's called reverse vesting, but it's harder to explain reverse vesting. So I do it this way.
Sorry.
Yeah.
So if someone leaves at 25th, 5,000. So what happens to the remaining 5,000?
They go back to the company and they get canceled. So if we go back to this, let's say founder 3 leaves midway, they now own 5,000. So all the percentages went up. You guys' ownership went up, right? It was 20, 40, 40. But now I took 5,000 away. I canceled them. It went 44, 44, 11. Right? Yeah.
For retention.
Now, if you are a bad lever, what happens if you're a bad lever? How many shares do you keep?
Zero.
Zero. And it's any time you become a bad lever in 10 years, you lose all your shares. Now, the reason for this has been a trend. It wasn't always like this. You'll still see it in Dubai. Actually, this is still popular in the UK.
How do you prove it? How do you prove it?
You need a court decision. So to be a bad lever, I need a court judgment that says you did one of these things. So it's actually very, very, very difficult to get. But if I do get it, you get zero, right? So 10 years ago, we used to have this intermediate or subjective where you're an okay bad leaver and a really bad leaver. And then we got rid of all of this and we said good leaver is anyone who's not a bad leaver, and bad leaver, I need a court judgment that says you stole from the company. Right? It's a very strict, and I actually think this is better. We had other versions of
Bad
this.
leaver will, most of the time, they will get their share from the company, or they will have an exit option
Yeah, but a bad leaver loses everything.
only if they get
Court
from the
just-
court,
yeah.
court decree.
I don't know if this is so far. It's better than what we had before. We had this before. They call it intermediate. It was a nightmare. No one knew what it meant, but now we made it clearer. Funds are using it. Actually, most funds now accept this. They accept the good and bad leaver.
What do you say, Hisham? Like, would it apply if the founders are not signing any agreement between them, or how would that work? Like,
Yeah, I mean,
sign this, and
yeah, there are agreements for all of this, but it's when they should paper it. Usually, you should paper it and hire a lawyer and do all that when you raise your first 250. That's sort of when there's enough money in the company to allocate a little bit to legal, accounting. You're not raising 50,000 and just hoping to God that your thing works, right? I wouldn't spend money on legal then, but when you're at 250, 300,
but
this is
Hisham, a lot of I have seen observed so many times. In two founders, they are working together. One of them is a CTO, and other guy is working on sales. And sometimes they broke, like they're not working together,
yeah.
and they do not have any agreement in most of the cases. Would you suggest, like, to sign an agreement and have a clear duty, like who will do what?
Yeah, I recommend doing that in at least informally with the roles, right? But this good and bad lever, you guys can't write this, right? Even the it's like it's a 20-page agreement. Roles are easy. You put it in ChatGPT. You say write a description for this and this and this, and it'll do it. But you can also jot in on the piece of paper, look, we all agree when we have enough money, we'll hire a lawyer to write out agreements that say we will vest over 4 years with 1 year cliff, right? You can put something like that down. Okay.
How many of you have the founders agreement at the moment?
I
with
doubt that one does. It's zero.
MOU, right? We have an MOU.
Resolution.
Yeah.
Okay.
Resolution, yeah.
That's something on the paper,
We
like.
do. I mean, part of the corporation, we have to.
I mean, part of your trade license, you have to state what's the shares.
Yeah, you and actually you have a different case where you have a legal entity.
Yeah.
Yeah.
You
Oh yeah.
submit
How many of you have legal entities?
all of them, and
Okay.
it's legally decided who owns what.
Okay.
Okay.
Good.
I think it's already fair.
Yeah.
Like-
Now, if you're a good leaver and you keep shares, there's another little twist. Your shares become non-voting. So this guy, we go back to this guy that leaves at month 25. They keep 5,000. Those 5,000 shares become non-voting shares. And the reason for this is, A, you don't want them meddling in the company if they've already left. But if there's an exit or dividends or whatever, they'll still get their share of dividends or distributions. And bringing someone in to replace them, that's going to be much easier to do if the guy they're replacing can't vote, right? Because the last thing someone wants to do is to go into a company to replace someone who has a voting seat, has voting shares. So that is another twist to this. And then let me see. If you pass away or become disabled, and disability is defined, we use the US one, but we can use any definition. it means 90 days without being able to do your job. And you have a medical report. There's a very specific definition for it. Company can either buy back the shares at fair market value, or if you don't, then the heirs take the shares and those shares become non-voting. Hopefully no one has to do this. The guys in the car industry, this is very important for you, the drag sale. People, especially in biotech, in construction, maybe cars, there's a chance big player will come and buy you early, right? They like your idea. They don't want to fuss with
There is,
Huh?
you're very spot on, Hisham.
Yeah.
Must say that.
Right. Yeah. So for those types of, especially those industries where there's a few big players and they keep acquiring small guys, you want a drag sale. Do you guys know what a drag sale is?
No.
No. Okay. A drag is, we'll take the example of 3 co-founders. It's when 2 co-founders want to sell the company and the third co-founder says no, you can drag the third co-founder in the sale. So it's the ability to sell the company when not everyone agrees to sell the company.
What's the vote against one?
Yeah, the norm is either 66% or 75%. So if we have 2/3, it'll be 2 out of 3. I wouldn't do unanimous. There's always someone that doesn't want to sell.
What happens if we do?
Hmm?
What happens if we are two founders?
Geez, that's so. In those cases, we either get a tiebreaker, like an advisor, member of the advisory board person. We can get them to say, look, the tiebreaker is this, or you do 2 out of 2, which is unanimous, which is very bad. But are you the one with the offer to sell? The 2 out of 2 orders?
No, it's not selling. We have an investment opportunity, but we're just saying that what if this,
Scenario comes up.
moved forward?
Yes, there are a lot of positive vibes coming from the big player.
But as of today, me and my partner were on the same page. But I'm saying, what if we reached a stage where one of us said no, we let it, and the other one said no, let's sell it.
Yeah. So you have a few options. One is, here I'll write them out, because when it's 2 out of 2, it gets even harder. You either do 2 out of 2, which is unanimous. You get a tiebreaker, so you both agree, you both respect Ayub, for example, or someone, and he's the tiebreaker. The other one is you say either one can sell, but at specific valuation or multiple. So we can write it so that if you're able to sell the company for 10x whatever revenue, you can sell and make the other guy sell with you, right?
So we will set like a target.
Yeah. So you set the target where يعني both of you will be okay with it. إذا حدا جر الثاني, sorry, I'm going to speak in Arabic. That they're not going to kick and scream time, that it's a fair price, or you do it's worth at least, I don't know, 10 million, right? We can do something like that, where if certain metrics are met, either one of you can force the sale. Actually, other than that, there isn't really much. Those are the 3 options.
So the easiest way is the tiebreaker.
Yeah,
Yes.
if you both respect and like the tiebreaker.
Yeah.
Yeah.
Or hello. Or I coin. Dirham.
All right, that is okay. we'll do a little bit on registration. Let me go around the room very quick. Registered in ADGM. No one. Zero. Very good. Okay. Free Zone Company in UAE. ولا حدا? No one's registered Free Zone? Okay.
So, yeah, we're at the same company.
So one. We have one in the Free Zone. Okay.
We do. Two in the free zone.
Three of us are
Free zone.
Three in a Free Zone. Okay. Good. All right. Anyone mainland? Zero. Okay. So we have 3 companies not registered and 3 registered. Okay. I'm sure you've heard this. Investors won't invest in a free zone, right?
They won't.
No.
We never heard
Won't or
You've
won't?
not heard this. Okay. Investors don't invest in free zones. Okay. Okay. So let's go to why investors. Okay. Investors like to invest in companies registered in one of these places: Cayman, Delaware, DIFC, ADGM, Netherlands. Question, I mean, I'm talking about venture investors, not that maybe traditional investors will do free zones, but your venture investors want your holding company, not your operating, the main one, the parent, to be in one of these countries. And the reason is they want certain rights. So venture, again, the board seat, reserved matters, lockup, founder vesting, divesting, all of this is not available in free zones. You have to do it it can only be done in one of these companies and in one of these countries. So that is the main reason. These are investor friendly jurisdictions. Right. So I don't think you guys are, I mean, I think when you start raising money, they will ask you eventually to set up the holdco, which is in either Cayman, Delaware, ADGM, and you'll have an operating company in the UAE, which are your free zone companies. And you can have one in Egypt, Jordan, and the founders, shareholders, investors own shares in the holdco. This is what your company structure will eventually look like.
Can I ask a question, please?
Yes.
Go ahead.
How practical could be the scheme when the holding company is registered in London? It's a limited company.
Yeah.
100% of this company is owned by Dutch stock, and the distribution is made by economic rights, which can be also tokenized.
The holding company is registered in the UK, and who owns the UK company? A Dutch.
Dutch Stichting Administration Foundation.
I'm not understanding. Who owns the UK company?
Netherlands Foundation, which is
a Dutch foundation. Okay, yeah, that's fine. That's fine. Because Netherlands is on the list. I don't usually put the UK because MENA investors don't like the UK because it's all public. Your financials, everything is public. So
if everything is owned by Dutch foundation.
Yeah, I mean, give me the name of the UK company.
It's not registered yet.
Okay, I'll show you like a norm. Let me see. Start now.
The 100% here in company house, the 100% shareholder will be a Dutch stock, Dutch foundation.
Yeah,
Dutch foundation doesn't show the registration.
Yeah, but your financials will still be available. The financials of the UK company will still be available. These are the micro accounts of a company. You have to put up this is a very small company, but like you will know who the directors are, which I guess is fine, but they will also know the shareholders, and they may also, and they'll know your financials, which is something. This is a big issue for most investors. They don't like having the startup, or at least many founders don't like to have their financials just out in the open.
Okay, thanks.
So I think we covered a lot. All right. Any other questions? We'll do Q&A for a bit. No? Okay.
Can I ask one more question?
Yeah.
How practical now in Gulf is actually this reinforced liquidity using security tokens, using tokenized securities instead, where you can when you can issue tokenized securities, and you can write the conditions on all the tokens.
Yeah, I mean, I've heard of this. We're now doing tokens for ESOP. We're doing tokenized ESOP. I have yet to see an investment made in tokens. I think it will start with ESOP, with nonprofits, with foundations, before investors pick it up.
Okay. Thanks.
Yeah, we're just seeing it now being used in ESOPs.
And also, Hisham, could you give us an idea about the liquidity in the UAE, how different it is from other systems, growing, slowing down?
No, the data on the UAE. So there's you guys should sign up for this. There is a guy. There's a huge foundation in the UAE that tracks. There's actually a lot of good data on this. So let me share screen. This is the 2025 report. This is the Dubai Future think tank. And you can, I don't know if you could see my screen. Yeah, okay. You can see that the market's still doing very well, especially seed stage. So this is number of active investors in MENA since 2010. It's like based on this data, it's still growing. But honestly, guys, for your businesses, I'm going to do something here. Most of you want to exit. Do you know what exit means?
Yeah.
Cash.
Yeah.
Cash? Well, you
Cash.
have options.
So selling the company on high valuation.
Yeah, either IPO or sell, right? This is the number of exits over the last almost 10 years worldwide, at least documented. This is probably a little low, but it's between 1,000 and 1,500 exits. From those, a very small number IPO, right? So most exits are through acquisition. So I would start building your company up to at least the end is it being acquired by someone, right?
Yeah.
I wouldn't plan for IPO. IPO is taking much longer. It's very expensive. It's much easier to exit through a sale to a bigger company. No. Okay.
Hisham, I have questions.
Yes.
The first one, what if the company that is investing in us, we want to benefit from the technology that it has. So we want to use their services, like some shared services from them. Would this affect the equity?
So this is very important. Separate it. The cash investment is X, and the shared services are optional and a different price, right? But don't put them together. They're going to try and put them together. They're going to say, "Oh yeah, but we're giving you free office space," for example. No. you're gonna give me. I'm gonna give you a safe at 10 million for $1 million in investment, and you're gonna sign another safe for 200,000. That's in kind, and the in kind has to be spelled out. You're gonna give me 3 offices. You're gonna give me 5 posts. You know, you have to be, because they're probably not going to give you the in kind. They'll give you the in kind for the first 6 months, but then they'll get bored of giving you the in kind. Sorry. We've seen it a lot, right? We've seen it where after 6, 7 months, they're like, why are these guys still in the office, right?
Or we can put
You're not welcomed anymore.
We can put it on the P&L as a cost, like they charge us and we pay them.
Yeah, or you pay them, but reduce straight. Tell them I want a discount. Yeah.
Exactly. And I prefer it as a partner, let's say, or customer.
Yeah, but don't confuse the two.
Sure.
Yeah.
And another question is, we're not talking about the same company. We're just talking in general. What if we have an investor and he wants to transfer the money? Is there any risk having this money coming from an entity or a individual anti-money laundering, compliance or whatever?
No, just tell your bank ahead of time. Tell your bank, call your bank, say, I just signed the safe with this guy. I'm expecting 500,000. What do you need?
All right.
If you do the opposite, they freak out, and then they don't do that. Call them in advance, right?
So before the transaction happens.
Yeah, usually there is a compliance department. So they would ask the compliance and they would ask certain documents from you.
Otherwise, they're going to hold the amount and then
even they will reverse the transaction.
Yeah.
They would not listen to you after that.
And then, take علبة حلو, come on, you know how to do this, right? You go to the bank, you take some sweets, you say, I'm expecting.
Yeah, me, and I took it in cash from the investor.
Now, it's good to build a relationship with your banker because you're going to have a lot of money coming in and out. And it's good to tell them ahead of time, especially if it's your first big check.
Yeah, that's a different topic, by the way. Like banks in the UAE are not so startup friendly, so you end up banking with 1 or 2 maximum.
Yeah.
They are not startup friendly.
Ali, Shiv, do you have any question? Roman?
Thank you, guys. Rami, we have to figure out how I know you. I don't know how I know you.
Hisham, you are in Dubai?
No, I'm in Amman, Jordan.
Okay.
And
Do you know Raghad Mdanat?
No. But she sounds Jordanian, Danat.
She used to be the chief legal officer at my previous company, so I thought maybe.
Yeah, but like your voice sounds familiar. You look,
Happens.
Okay. Thank you, guys. Thank you for. I know it's late there.
Thanks, Hisham.
Thank you, Hisham.
Thank you.
It's
Thank you, Hisham.
We almost covered all aspects. We covered safes, valuation cap, discount, and founders agreement. I'm thankful to you, Hisham, for today's time. And also, I will share with you the resource, like founders agreement and some other documents like safe templates, which is basically it's the Hisham's library. I'm thankful to you, Hisham, for sharing with us.
Thank you.
And
Please give comments and feedback. Anything we can do better, we can learn too, right? So
for sure.
Thank you. You guys. All right. Okay. Bye, guys.
Thanks so much. Cheers. Bye.